Well, hello everyone. I hope you all are traders. Cause okay, better. Okay. So yeah, so I really hope that all of you are traders because my presentation isn't like a lot like fun like Shapeshift, but I will try to tell everyone on how the options and derivative space work in crypto, DeFi particularly. We see that DeFi probably would take over the CeFi markets. So that's what I'm here to talk about. Great. Okay, so this works. I work at Ledger Prime. We're a quantitative hedge fund. We're owned by FTX US. So FTX owns us and FTX derivatives. I also teach at NYU Tandon. I teach blockchain and DLT. Prior to joining Ledger Prime, I was at Republic, where I started Republic Crypto. I'm a angel investor in over 30 projects at this point. But I've been in Ethereum like since very early on. I was a very, very early employee at Consensus, where I took Singular DTV, which is like now known as Breaker, through its ICO. So I have seen the growth of Ethereum, like Vitalik and the team, like in front of my eyes, and I'm like, I couldn't be more proud of that, like how far this community has come. So yeah, like I said, we're a multi-strat hedge fund deploying a quantitative and systematic investment approach. We currently have about 180 million under management and have worked and invested in over 30 DeFi projects. The exact number is 55, but then 30 is the number where we're market making, we are providing liquidity, we've set up AMM pools. Uh, we are the largest liquidity provider in several CeFi options platforms like Deribit, Bit.com, FTX Derivatives, our sister company Paradigm and CME. But since 2020, since like you know the rise of DeFi, we've also been very active users and investors in projects like Friction, Katana, Ribbon Finance, Open. They were just here as well. Dopex and StakeDAO now. We provide consistent and predictable market liquidity, ensuring high liquid and market depth and transparent price discovery, which allows investor and participants to trade more efficiently. Um, Most of our investors are institutional. That's why, um, and most of the capital that we've actually raised is in past a year or so, and not a single day goes by where the institutional investor doesn't have questions on DeFi, like why that particular market moves, faster than CeFi. So it's so given that. Um, in 2021, we kind of saw CeFi grew by 6% in 6 times in 12 months, while DeFi was able to achieve the same relative growth in just 6 months, right? Like if you compare DYDX volumes to like Bit.com or CME, you would see that there's not a lot of stark difference there anymore. Deribit and obviously FTX US derivatives were the fastest growing platforms, both of which, were leading markets for. But in 2022, we have started seeing, and then obviously they're given the other ecosystem growth. We see DeFi options taking on larger volumes than DeFi. Obviously, that includes volumes from Solana, Avalanche, Dot, but ETH still dominates the market. Platforms on Ethereum, and then ETH and BTC options because they're traded on CME, which like you find a lot of institutional involvement on. Um, One thing we've started seeing in 2022, which like we've been thoroughly excited about, and half of our team is here for that. We've started seeing more structured products and exotic option trades in the OTC markets, which have been, in traditional finance for like years. And in 2022, I think like for past 3 to 4 months or so, we've started seeing more of such products in DeFi. So that's also kind of a sign that the market has grown, it's matured. or the traders or the founders that are active in the DeFi space have a better understanding of on how even traditional markets work. Um, this is the current state of CeFi option markets. Obviously, the volumes have grown over the years, but this doesn't include the OTC or non-BTC ETH markets. We have to be very much aware of that. A lot of the options trading, aside from ETH or BTC, does happen in like Telegram chats, where it's actually very true. So FTX is going to launch Solana options. There's still no market for like Avalanche options. Uh, Part of the reason is obviously volumes, and part of the reason is that how many traders are like sophisticated enough to trade these markets. So that's the issue that you currently see with CeFi. uh, the growth attributed to influx is obviously sophisticated funds. Like on the CME level, you see, if in news or whatnot, you read Goldman Sachs entering crypto. It's not that they're entering crypto like just to say hi and hello. They're probably just trading BTC or ETH on the CME level, and that's it. That's the only thing they would want to touch because it's fully collateralized. So that's where the institutional level involvement is in CeFi. Uh, but obviously, it hasn't grown like the DeFi market has. Uh, we've been following the traditional markets as blueprint for our growth. We know very much right now that crypto is here to stay and its own asset class. And in other asset classes at scale, option trades 30x at the size of spot markets. And we think crypto will be no different, right? Like the charts here present the speed of growth of derivatives for other asset classes as well as size of derivative markets relative to spot. This is how currently the CeFi option market structure looks like. It's almost a replica of any CME order book that you'll see, or any any traditional platform you'll see. Um, there is there's a lot of like order of magnitude more complex than spot, especially for market makers, because we have to consistently maintain two-way of liquidity for all option contracts when liquidity is dispersed. It's also very, very computational intensive given automated models, and we have to calculate prices for each option on a higher frequency basis and update risk and inventory parameter. Um, like I said, this is a snapshot out of Paradigm where we're active traders on. But in good news, DeFi like changes it, right? Um, it has introduced the newer versions of like AMM pools and whatnot. So the TVL currently, right now, is 1 billion, which was at the end of 2021. This does not include like on how much capital came in like in past 2-3 months or so. Obviously, a vast majority is attributed to on-chain structured products. DeFi projects realize that most users prefer simple, automated strategies because the investors are still retail at the end of the day. So the simplified process is of using a yield strategy on like let's say ribbon or whatnot, the higher the TVL probably could be. One thing we've started seeing an exponential growth is on option walls because they have the potential to provide a more sustainable return. Several wall strategies have a lower correlation with like general crypto markets and therefore provide users with a diversified source of return. Walls exist across all chains, but the promise that's coming out of walls right now, which we've seen, out of these DeFi structured products, is obviously DeFi yields, right? We see that they're traditionally generated via lending and trading fees. we're providing liquidity um, first on the pool level by offering, such products that generate yields via traditional market strategies like cash carry and options trading. Then retail investors, could be anyone in this room, they deposit capital into this DeFi walls. Then these projects like turn into turn these, the capital locked into sell options to counterparties again to like us in auction markets to get the best price. The premium from this is then passed on to depositors. So, like generally across like all structured platforms that we've seen, it's just the AMM model, right? It's not like as much of an order book because it is extremely computational heavy and like hard to maintain. So again, that's the on-chain mechanism that's been extremely promising, on the DeFi side. Um, Obviously, there are hurdles. We see a lot, possible option contracts. Makes it, very computationally expensive to build liquid market on chain. Um, Expensive from gas cost perspective. Sometimes it's extremely hard to trade on a certain network. Um, Ethereum has its gas issues. Solana has its TPS issues. So still there's, we still haven't found like a very much like level ground for that. Um, Obviously, on-chain portfolio margining and liquidation system is needed very much before, DeFi could completely take over the CeFi options. Um, we need a lot many more strategies, on-chain strategies like Delta One, which, in the form of spot, perps, and future. We have seen the projects that have launched perps first and then options later have been doing significantly well in the market. And then obviously, right, like impermanent loss has been a huge concern for anyone and everyone that's been trading. So the other thing is like portfolio margining, cross margin, and liquidation engine enabling partial collateralization. Obviously, this enables greater capital efficiency, ability to delta hedge. I think the market has gone a lot better in this, like delta hedging, because there's many more players like us now than like compared to early 2021. Um, like I mentioned, efficient protocols. Uh, Layer 2, we're counting big time on Ethereum's Layer 2, Arbitrum, Polygon. Whenever we've been trading on these, it's a lot more efficient, given that how in little time that they've built. If AMM model, then the ability to deal with impermanent loss via theta decay as well as capital efficiency. That's the struggle with like, AMM modeling at this point. And then obviously, right, like as the community grows, um, we need more and more derivative traders and market makers so we could enable accurate pricing and deep, consistent liquidity. These are some of our portfolio projects and some of our supported projects. When we're saying that we're supporting a project or we're working with a project, what we're doing is, so all the things that I've described in my earlier slides, um, we're investors in them, but then we're also creating their AMM pools. So the retail investors can trade on it, and then we're creating markets enough by providing different trading strategies on the other back end that generates yield. Ribbon Finance, which is like an Ethereum darling, Open, StakeDAO. We were very much early on investors, contributors, stakers, and we've helped them grow their TVL, their trading strategies over the years. And we see like even though a lot of it has been like on Ethereum, given that how much liquidity is on Ethereum, we see projects literally like replicating the same models on like other chains. But then, like add the TPS issue, add the volumes issue. So that's why we think that Ethereum currently even leads the entire DeFi movement, because we've seen on the volume side. Um, Two of our projects open. The team was just here. Everyone has an idea. So they're the largest DeFi options protocol at this point. And what their V2 version has done is partial collateralization of options, enabling a more capital efficient environment for option sellers, which is extremely important for market makers. So in traditional CeFi markets, right, you have to like lock up either full collateral or certain amount of collateral in order to trade. Uh, Most of the DeFi platforms do the same exact thing, but Open is one of the first that have started to do partial. Um, that kind of like helps the traders, not to lock up that much capital into, into marking these positions. Um, so we're kind of like very bullish on Open V2 at this point. Um, Obviously, their robust liquidation engine designed enable user and market makers to provide increased liquidity. Open's backend is used on a lot of other Ethereum's projects as well, given on how liquid it has become over the years. Um, then obviously Ribbon Finance. We were one of the initial and largest liquidity provider for their structured products. And what Ribbon basically does is it generates yields for their structured product like vault via on-chain options contracts, like using Open's protocol, which I just mentioned, that some projects use in wrapped ETH or BTC. And then Ribbon's initial contract design, the fact that market makers are initially buying and not selling options, and thus capital efficiency for market makers less of a concern, as well as a concentration of strike liquidity makes it easy for, you know, shops like us to consistently provide liquidity in the size akin to CeFi markets. That eyes on delegates, which means professional market makers, that can provide more capital within their ecosystem to help price and stabilize their options. Um, One thing you'll know is that even though it's an AMM pool, most of the pricing is very much similar to CeFi, like especially in Dopex's case. You'll see extreme similar pricing on Paradigm or in Dopex, like on certain given days, like random days. These guys are planning on launching on Optimism Mainnet, I think, um, to minimize fees and transaction time. And then obviously rebates for option writers are in case of, loss like through their tokens. This kind of like ensures that superior returns in comparison to writing like naked options. So there's like, the safety net for any one of us that's looking to grow liquidity is provided there. And I think that's all I have to talk about options. So I'll open it up for questions.